What is happening to single family homes in America? That's what I'm going to cover today on Real Estate Daily. Hi, welcome back to Real Estate Daily. My name is Emmy. I am the producer of this show. Troy, our regular host, is coming back from Texas. He was at a foreclosure conference, so he will be back with us tomorrow delivering our news and updates. For today, you were with me, back with me one more day, I know. If you enjoy these updates, please go ahead and hit that subscribe button, ding, 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 covering my face right here. And if you would like to receive a notification every time we post, hit the notification bell. You will get a push notification straight to your phone. So let's go ahead and jump right into the news. So this is an interesting article that's really big today. A lot of the larger real estate news sites are reporting it. It says, home flipper Opendoor hit with losses in echo of Zillow collapse. Company lost money on 42% of its August resales after it failed to anticipate slide in housing demand. So this is quite interesting. It talks about how the market's sharp downturn has been bad for builders, flippers, and almost anyone who had plans to sell a home when rising mortgage rates shut down the pandemic buying frenzy. The slump has been especially harsh for Opendoor and iBuying style companies. So it says here that they sell thousands of homes in a typical month, lost money on 42% of its transactions in August. And it's showing that it did even worse in key markets such as Los Angeles, where they lost about 55% of sales. Lost money on 55% of sales, whereas Phoenix, they were down as much as 76%. So this is absolutely crazy. They're saying these losses are incurred, don't include fees charged to customers or expenses incurred in renovating and marketing homes. And this has been looming ever since the housing market turned suddenly recently. Opendoor warned investors that they did expect to lose as much as $175 million in adjusted earnings before interest, taxes, depreciation, and amortization in the third quarter. This is bananas, dude. It shows a little graph here. And it says the iBuyer is selling more homes for less than it paid. Ooh. So yeah, the model of this business really let me try that again. So the model of this business is based on it acquiring homes, making light repairs, and then reselling the properties for a higher value. I think we're going to see a lot more of this as our very unique housing market and economy that we are currently in is unfolding. So we're going to keep an eye on this story as it develops, and we'll keep reporting back to you on it. Our next article here is from Fortune, and it says the home price correction is spreading. This interactive map shows you if your local housing market is impacted. So let's go down here. I know Troy is not always a huge fan of these interactive maps and graphs, but I am. Troy is really good about understanding every single little piece of data that's being presented on these maps and graphs. I like these because it's a bit more palatable for someone who has a less intricate understanding of real estate and the housing market. So this is showing a shift in home values between May and August of this year. So it's not very much time. As you can see a lot here on this West Coast, we're showing a lot of the values going down. So the darker red it is, the closer to a minus 10% shift they have had. So let's go ahead and just look in here on California, as that's the market that we mainly pertain to. As you can see here in Central and Northern California, San Francisco, Oakland, and Berkeley is down about 7.8%. Whereas if we look at the most red here, San Jose, Sunnyvale, Santa Clara, they're down almost 11%. Whereas Merced, almost 3%. Salinas, California, almost 4%. Fresno's not doing bad, 1.1%. San Luis Obispo, Paso Robles, they're still doing good. They're under 2%. Santa Maria, Santa Barbara, about 2%. Now, as we get towards our area here in Southern California, it says Los Angeles, Long Beach, Anaheim are city metros that we are in here. We're down about 6%, whereas the Inland Empire, Riverside, San Bernardino, Ontario, they're down about 2.39%. And then as we go down south to San Diego, Chula Vista, Carlsbad, they're down almost 6%. So it's interesting to see after we had some of those incredible, price highs in the spring, how stuff has shifted now that we are into winter. We're closing in the fourth quarter here. So this is very interesting. As this is reported on also, we will give you more updates on that. I'm sure Troy will have kind of an interesting take on this data also, so we may recover that on our Instagram. Keep an eye out for that, the House Heroes AG. Our next article here, it's from The Real Deal, which is a real estate news based out of New York. So the headline here says, "Take my apartment, please. Luxury rental concessions are back." So concessions are basically just like incentives. If the apartment or condo or whatever type of living space you're looking to rent has a lot of vacancies, they will give out concessions to entice you to lease. Sometimes it might be a free month of rent or possibly access to amenities that would normally cost more. Either way, they're going to give you some sort of incentive to sign a lease. Therefore, they will have someone inside of that space versus no one, making the loss a lot smaller than it would be if no one was filling it, obviously. So this is really interesting. I think this is very valuable knowledge to arm yourself with if you're looking to rent possibly a luxury space or something of the sort. I see it kind of like how you negotiate who pays what closing costs. We are going to use this to negotiate a better deal for ourselves than if you just came in off the street and signed on the dotted line for whatever they were advertising. So use this if you are looking to rent a luxury space soon. Next, housing starts. Collapse in single family permits is the real story. So this article from Yahoo Finance, this came out today. This is very, very, very in-depth, and Troy and Troy, I would be producing, he would be speaking, that's how we normally do it. He may cover this again tomorrow, or we may break it down further on the Instagram or the TikTok, so go ahead and keep an eye out for that. This data is really interesting, and it gets very detailed. The part that I want to focus on is the main point from the headline. So the government report also showed the construction pace of single family housing rose 3.4% to an annualized 935,000 rate, marking the first increase in 6 months. Permits for single family homes, on the other hand, fell 3.5% in August to 899,000, down from 932,000 in July. So this little graph right here shows that September mortgage applications is part of what's crushing the construction demand. So yeah, right here it shows falling mortgage demand is crushing construction. So the less new construction we have, or excuse me, the more mortgage demand decreases, the less building sells, the bigger problems that we have the bigger problems they have, I should say. Because the whole point of a home builder is to build homes and make money. That's the whole point of their business. So that is the main data point that they're really getting to here. If you're into this type of data, I would definitely suggest looking up this article and really diving in, because there's a lot of stuff in here that's very detail oriented. So our rates, let me adjust this so you guys can see it a bit more. For some reason, Optimal Blue is being very strange today, and it is not showing me my normal rate graph, so I'm just gonna have to move it around on my display capture here and kind of show you. So 30-year conforming is at 6.252. It's up a bit here, and then 30-year jumbo is at 5.8, which is down just a tick, and then 30-year FHA is over 6, which is also up a bump here. So this is kind of crazy. Rates have been very volatile, and I'm curious to see how they're going to be pretty much every day. These numbers were finally updated from Monday. The Monday numbers we saw yesterday were not updated yet. Those were trailing. These are updated from today. Hopefully by tomorrow, we can figure out why they're not being displayed as they normally are on that website, so that I can have them for you. Like I said, Troy will be back tomorrow as well. I hope you enjoyed this update. If you did, my name is Emmy. If you did not, my name is Troy. I'll see you tomorrow.